My name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of the Chicago soybean complex. Chicago soybeans. 12 weeks ago here, and at every opportunity since, I said, and I quote, "The only other thing to bear in mind is not here on this daily chart, but in Chicago soybean meal." And that is the well-highlighted annual key reversal down we saw there for 2023. Not directly related here, but not worth ignoring either. End of quote. Now, I know I sound utterly boring, but this point is important. And I feel I must keep repeating it such that in all things this year and going forward, all things should be seen in the shadow of this pattern. Okay, so since the low in mid-August, we have seen the creation of three patterns. Firstly, a mid-August to mid-October bull channel. Secondly, a late July to late September reverse head and shoulders pattern with a bright red neckline, currently at 1027. Last time I set up potentials for this pattern of a primary target X overhead in the 1096 area and a secondary harder to reach target X1 up in the 1123 area. The market tried up towards the primary target X during late September within the bull channel, but just missed reaching the primary target X due to the declining mauve medium moving average, currently at 1035, capping and then slapping the market lower. I'm considering retiring these two targets now, but I will leave them on for one more week. Then there is the third pattern, the early July to early October bearish shift pitchfork, highlighted in dark blue on my daily chart. This pattern is still operational and for now looks quite good, with the market in between the overhead upper time currently at 1049 and the middle time below currently at 953. There's also one other pattern that I'd like you to consider, one I spoke about 5 weeks ago when I said, as a big picture idea, to look at the action since the double top in May as a possible descending scallop pattern. For this pattern to realistically work, prices, and I quote from 5 weeks ago, would have to soon halt and then decide whether they wish to remain bullish or bearish before making their move. It's a bit early to say if this pattern will fully deploy right now. End of quote. Even now the pattern is not fully deployed, but with plenty of potential both down and up. An idea on the upside, not yet a target, or even a potential, would be in 1163 on the upside, and likewise on the downside 890. As I said, it is still early on this one, so in the meantime just watch the dark blue bearish shift pitchfork for the immediate bearish angle of attack, with the green short medium moving average currently at 1017, 1018, capping the immediate action, and with some diminishing potential targets topside for what may turn out to be failed targets for a reverse head and shoulders bottom. Chicago soybean meal. The main pattern driver in this market had been, and now possibly still is, the dark blue November 2023 to early May 2024 bearish shift pitchfork that you can clearly see on my daily chart. The market is currently in between the overhead upper time, currently at 312.80, and the middle time below, currently 265.20. This pattern had been previously breached and arguably broken, with prices having consecutive closes over the dark blue upper time. However, please note this break higher was not a spontaneous move, but rather the result of the construction of bullish incentives, notably the mid-August to early October bull channel that petered out, and we saw a break lower at the start of October. I will speak more on this bull channel shortly. The cap on the market was the combination of the upper bull channel line and a declining long moving average, currently at 335.60. That saw just a single close over before swiftly turning lower, all at the start of October. I will for now concentrate on the break below the bull channel line, and 4 weeks ago I laid out what were then potentials for such a break lower. Thus a primary potential, or now target X, was down in the 313.60 zone, with a secondary hardest reach potential, or target X1, down in the 298.10 zone. Target X was reached 3 weeks ago and target X1 was reached last week. I also said at the time back 4 weeks ago about these potentials that, and I quote, "If this should come about, then it raises the point that the dark blue bearish shift pitchfork could have repaired the break higher seen these past 2 weeks. I now only need to remind you once again of my words of 67 weeks ago. So this is now 71 weeks ago. And ever since, so well over a year and a quarter ago, when I pointed out that Chicago soybean meal was about to have that rarest of patterns, an annual key reversal down. This duly came about at the end of 2023, and we have been living in the shadow of this pattern ever since. End of quote. There is one new pattern I'd like you to draw your attention to, one that has developed since that high seen in early October, and it is the bright red mid-May to early October bearish Andrews pitchfork. The market is right now running along the top of the middle tine, currently at 295.90, and this tine is providing a pretty good snapshot of the bearish angle of attack of this market. I do not think this new bright red pitchfork will yet replace the dark blue pitchfork. Rather, I suspect that it will be working together with the bright red one, having a slightly more acute bearish angle. Chicago soybean oil. The main recent actions over the summer here have been the construction of an early July to a late August bear channel that almost from the start broke down through a key support that became a resistance and is now once more a support. And that is the bright red highlighted neckline extension, currently 45.42 of the October 2019 to February 2020 head and shoulders top. The end of the move down of the bear channel finished in mid-August, really in the middle of nowhere. However, it was not a simple end, as the price over August to September took a second crack at heading lower, which failed, and we ended up with not only a dark blue mid-August to mid-September bullish Andrews pitchfork, with the market this time in between the overhead dark blue middle tine, currently at 49.01, and a dark blue lower tine below, currently at 45.84, but we also end up with an August to September double bottom, with a primary target X in the 46.36 area, and a secondary hard to reach target X1 up in the 47.56 area. Not only that, but going back to the old bear channel pattern, we still have outstanding potentials for a break up and out of this pattern. Thus, as I said 11 weeks ago, we have a primary target X2 up in the 48.23 area, and a secondary harder to reach target X3 up in the 49.50 to 60 area. Last week, the market reached the primary target X at 46.36, and today has achieved the secondary hardest to reach target X1 up at 47.56 area, though it's also having a pretty good crack at X2 at the moment. Targets in X2 and X3 are still live. So what has developed over the last few weeks that has stimulated such a rise? I suggest the construction of a new mid-September to mid-October bullish shift pitchfork, highlighted in my daily chart in purple. I backed that up by pointing out how the crossover of the purple middle tine, currently at 45.70, and the dark blue lower tine stimulated the immediate countering key reversal up and bullish engulfing pattern yesterday. Now, as I've said many times, such crossover of tines being fairly notorious for instigating such volatility. This purple bullish shift pitchfork is a less acute angle than the former dark blue Andrews pitchfork, so that price is rising with the first purple, so that we're seeing prices rising up with first the purple upper tine, currently at 48.22, before they test the dark blue middle tine. And they are actually testing this upper tine right now, as I speak. In between both, so that's the dark blue upper tine and the purple middle tine, is the 38.2% Fibonacci line of the March 2020 to April 2022 move at 48.95. And this Fibonacci line is very interesting because it capped prices in July, the start of April, the end of March, mid-February, and throughout January this year. So watch that carefully on any break higher above the purple upper tine. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Service International Limited. And here comes the final important bit.